Yo, what's up, ladies and gents? So welcome to the third video of the public advanced liquidity series on my YouTube channel. So just for some clarity for those who are new, all three of these setups were given out live on X beforehand. So I like to, whenever I explain something, I talk about stuff that was called beforehand, because anyone can explain something in hindsight to the finest detail. That's easy. So that's just for some clarity on that. So here is basically my tweet trail, all the updates that I tweeted, and some of it was Discord exclusive, but most of them were posted on X. All right, so let's get into it. Okay, so this is what this is what I was looking at when I started my idea, basically. So the first step when you're doing advanced liquidity, for me, is to identify a nice area of support and resistance, because that is retail's POI. That is where they will be entering positions, whether it be a support level or a resistance level, it doesn't matter. We just need to identify the level, and from there we can build a theory. It's not we identify the pattern and now we start trading. We identify the pattern, then if it's there, we start looking into, is this a good trade idea? Is this a high probability trade idea? We add some layers on top of it. Okay, so I have marked out the area of support. Now some might ask, why did you mark that area out as support? I simply just use my eyes. All right, if you put on the line chart, it's a bit more clear sometimes. You can clearly see that this area was an area where price was being supported, or a resistance right here. It's just a clear SR flip zone. All right, just by looking at it, nothing fancy. So that is the first box checked. We do have a clear area of support. Now the second box to check is you need a nice swing low below the support or resist. Well, if it's support, you need a nice swing low below the support. If it's resistance, you need a nice swing high above the resistance, because that is considered safe area for retail to put their stop loss. So on the 4 hour right here, we don't have a clear area of swing low below the support, so we go down in a few time frames. On the 2 hour, we do have an area there that can be deemed safe for support, so that we say retail will long the support, get a safe in quotation mark stop loss, and target maybe those equal highs, something like this. Okay, so first step, we have identified an area of support. So we are in business. We can try to frame a trade idea around this. Remember, the pattern is not it, guys. You're not saying, okay, we have support, there's a swing low, time to short. It's a high probability short, or well, it's increasing in probability as we progress through the steps. So you do have a potential setup, but that doesn't mean you just enter now. Okay, we add the second layer. We have a bullish market structure shift, right? So remember this, the A plus setup is, let's say we're looking at A plus setup for shorts, bullish market structure shift, price returning to support. That is the A plus setup for shorts. If it's bearish market structure shift, return to resistance. That's the A plus setup for longs. We'll be doing that one on FX, since FX is obviously inverse to the dollar. So we'll be looking at those charts right now. That's also part of framing your trade idea. So right now we have an area of support, clean area, bullish market structure shift, price return to support. We do have a swing low to target. So that to me sounds like an A plus setup, because bullish market structure shift. If price were to be bullish, we would expect it to just continue bullish, but it returned all the way back to support, and then here's the final hint, it started to accumulate. So it's giving all this opportunity for people to buy. People are buying, I don't know what they're buying, breakers, support, bullish market structure shift. They created a scenario where buying looked possible. Okay, so that was the main idea for me to short the dollar and to be long on FX. If we make a list of what we just mentioned, why it's a high probability, why I stuck with the idea, let's start from the top. We have a clear area of support and resistance. You can see it here. We had a bullish market structure shift. Price returned all the way back down to support. We do have a swing low for safe stop loss, and we do have a final accumulation inside of the support zone, giving retail the opportunity to get into longs. So the idea is to get them into longs and then put their stop loss there, target this, and then bleed them out. That was the expectation, and that's exactly what happened. You can see here, this does happen a lot. Stops right before the target, creating an equal low, just goes up a little bit and then takes it out. You'll remember the FX, I think it was FX, set up from, I'm not sure was it FX, but anyway, there was a setup last week where it did exactly the same. It stopped on the liquidity, went up, and then took it out the next day. So I hope that is clear. I think it's pretty clear. Let's look at GU at the same time. Now keep in the back of your head that DXY bias, and we look at GU. So decent area of support and resistance, not the cleanest, but it's there. You can see these wicks going up in there, breaking through, being supported, breaking through with some resistance. So it's there, but it's not the cleanest. It's not the cleanest setup. But we have the confluence of DXY. For us, that DXY is bearish, so that this will be our swing high above the resistance for GU to add more confluence to the idea and to give us a nice target on GU for TP. So I took TP there. And then if we look on EU, similar to EU, very clear area of support and resistance, not the cleanest swing high above the resistance because it's very far. The further it goes, the lower probability it is, because we argue that retail wouldn't want to put their stop loss so far. They don't want to trade like this. They want maybe to put the tighter stop somewhere around here, but there's not a nice swing for the target. So not the cleanest setup, this one, in my opinion, but we already had more than enough confluence from a DXY and GU. So we can still use this idea because it's still valid. Look at the a bearish market structure shift, return to resistance, accumulation at the resistance. Isn't that our A plus setup for longs? Similar to how we have bullish market structure shift, return to support, accumulation. We have bearish market structure shift, return to resistance, accumulation, and that is our signal that it's time to expand up. This move will most likely always be an expansion, a quick move, because we are targeting those stops. We already set the trap. This move is usually a quicker move to take out the stops. So I think that's clear. If you have any questions, just let me know, and yeah, have a wonderful week, guys. Cheers.